I cannot think of a time in American history that I've researched and obviously lived through where things have changed any faster economically than they have in the last 3 to 4 years and where we're headed the next couple years. What is it going to look like in 2024 and 2025 to get access to personal and business credit cards in particular, and other lending products for you to level up and scale up your finances and grow out and expand your business? What is it going to look like as far as the economic landscape? We have an election cycle coming. How does that affect your ability to get access to capital? How will lending standards and underwriting start to shift around, and access to capital and cost of capital? How is that going to change going into 2024 if what's being put out there is true? In 2024, as I've said in recent videos, I'm going to continue to talk about, the Federal Reserve is expected to cut rates potentially up to 6 times next year. Again, for context, the Federal Reserve only meets 8 times in a year. So they're expecting potentially up to 6 cuts. Even if it's a 0.25% cut in 6 cuts, you're talking about a 1.5% drop in the federal funds rate. Very, very notable. Mortgage rates will get pulled down significantly. Credit card rates and other lending variable rates will get pulled down significantly if this happens. Deposit products would also do the same, but that's another video. Your ability to access capital is going to change if that happens. Right now, we are still seeing where, generally speaking, getting access to personal credit cards, decent limits, business credit cards is reasonable at the moment, even though we've seen a ton of downward pressure from higher rates and the struggle in the banking system. Generally speaking, people are still getting approved for funding. It's hard to say if it's anywhere near the same rate as it was maybe early 2022 and prior. Nonetheless, generally speaking, if your finances are reasonable, you still have access to that capital in most cases. What is likely to happen in 2024 if we start to see legitimate rate cuts? I keep saying, even if it's half correct, three rate cuts at about 25 to 50 basis points, or 0.25 or 0.50%, will put us somewhere between 75 to 1.75 to a 1.5 in rate cuts. That would be very significant. A ton of money would flood back into the lending space. A lot of borrowing activity would pick up. Banks would be trying to make up lost ground from the tighter underwriting and tighter standards and the lack of growth that they've had to go through the last year and a half because of higher interest rates and more uncertain circumstances. You would see likely where banks and other lenders would get more aggressive at trying to expand their market share, grow their business, and expand access to capital. Underwriting standards will probably loosen up pending the health of that financial institution, of course, because the banking crisis is not over just because rates have dropped. But the cost of capital will drop significantly, and this will make your ability to get access to capital more reasonable, and it would make your ability to actually profit from that use of that capital, if you use it wisely, of course, more reasonable as well. Meaning your ability to go out and borrow money, put it in some kind of business activity, self-employment, investing in real estate, and then your ability to profit from that activity, at whatever percentage rate, will be greater because the cost of the debt to get into that activity has reduced. So 2024 has the capacity to be a great year comparing the last year and a half to get access to capital. It could even be more aggressive than that, to be honest, because asset valuations are likely to what Patrick Bet-Davis and other experts have been saying, crash upwards, meaning that housing prices are likely to shoot up through the roof because of the competition, because more people can afford to buy in an already hot market with suppressed demand, suppressed supply. That's just one example, one corner of the economy. As I've shot in a recent video before, if you're self-employed, a gig worker, or a small business owner, and you're in an industry that relies on discretionary spending from consumers, meaning that the excess capital, you have the kind of goods or services that people need excess capital for, not like, you don't provide something that people need to have. In 2024, your ability to borrow capital and expand your business or expand your operation could be very significant, because as soon as the Federal Reserve really pauses too long, which is already happening, you're seeing you know, the market go up. You're seeing different things shift just because the Federal Reserve looks like they're done raising rates. When they start cutting rates, I can tell you right now, lending is going to boom in a lot of different sectors of lending. Business credit cards, personal credit cards, home loan lending, real estate investor lending, business lines of credit. All of this is going to start to become more accessible and cheaper to get access to. This is going to intensify the competition as well. So that means that you need to position yourself ASAP financially to qualify for these things, to be able to go out and get access to this capital. Do not wait until it's happening and then start chasing it after. I keep talking about timing and proximity. You need to be in on opportunities as early as possible to ride the wave up. These things will peak, crest, and drop back off. So you have to be prepared. We don't know what the hell deep 2025 or even early 2025, 2026 looks like. Time is flying in a sense of speaking. Economically, things are changing fast. We don't know who we're going to get in office, the fiscal policies we're going to see. We don't understand how deep, how far the rate cuts are going to go, how fast the rate cuts are going to go. Will we be in a recession when it happens? Will the economy be booming? A lot of factors at play. Position yourself financially now to access that capital, to grow and expand your operation, to expand your investments. This is the time to do so. I wanted to bring this to you because I'm telling you, this is going to change fast. You'll look up in March, you know, summer, March, June, somewhere between spring and summer. If rate cuts start kicking in like that, it's going to flip on its head. And you're going to be chasing these things if you're not in position. To all my pioneers, welcome back. To my new viewers, welcome in. Want to learn more about myself and the channel? Start in the description section and work your way to the about section on the channel. Comment down below. Let me know what your financial strategy overall is looking like next year. What banks and institutions or lenders that you're partnered with, working with, or plan to work with. And what tools, what debt tools do you plan to get access to as this starts to loosen up and get cheaper to access? Comment down below and let me know. I want y'all to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.